What's going on, vets and civilians? In today's episode, we're going to cover some VA basics that folks still get wrong to this day, such as VA loan limits and credit requirements. Spoiler, there are no VA loan limits, except for in certain situations, but we'll cover that. We're going to cover debt to income ratio requirements and residual income requirements, which are more important and can trump debt to income ratio. We'll cover appraisals. We'll cover property types. We'll cover who is even eligible for a VA loan. So once again, shout out to the vets, but I really appreciate the civilians that have joined this episode because I bought my first home while I was in the military and I didn't use a VA loan because I had no clue about it. But guess who should have known about it? Definitely my realtor and definitely my lender. And they should have asked why I'm not using a VA loan, but let's get into it. Welcome back to House Rich, the first time homebuyer show where we help millennials figure out how in the world do I buy my first home? Today we're talking VA loans, so let's just get right into it. No hurry up and wait situation. So first and foremost, who is eligible for a VA loan? Well, if you're watching this video on the back of the flight deck, or you yelled at somebody or somebody yelled at you and said, time to lean, time to clean, you're eligible because you're in the military, right? If you've done 90 days of active duty, you're eligible for a VA loan. You can jump in the future about a minute while I talk to everyone else that's kind of on the fence whether they're eligible or not. So if you're a veteran, if you're in the National Guard, if you're in the reserves, if you've also done 90 days of active duty and you serve post August 2nd, 1990, you're eligible for a VA loan. Outside of those situations, typically if you've done 6 years of credible service, you're eligible for the VA loan as well. So if you don't fit in those situations or you have questions, literally just Google who is eligible for a VA loan. The first option should be from va.gov. You want to look at the va.gov answer and look up your scenarios because it covers different time periods and different scenarios as well. I just can't go over every single scenario because that would be boring for me to just read those guidelines for everyone. Also, if unfortunately you're the surviving spouse of a veteran, you're eligible as well. I'm going to read these guidelines straight from the va.gov website. So if the veteran is missing in action, if they're a POW or they died in service and you didn't remarry, you're eligible as well. Also, if they died from a service-connected disability and you didn't marry prior to turning 57, or they had a service-related disability and they died from that. No matter your scenario, you need to obtain your certificate of eligibility, and that will tell you what your VA entitlement is. If you have questions, you can contact your regional VA eligibility center, and that contact information will be down below. As I mentioned, there are no VA loan limits. So why do some lenders say they are loan limits? Because one, they may be misinformed, and two, lenders also have something called lender overlay. So whether it's the VA, USDA, FHA, the FHFA, who sets the conforming loan limits, those organizations set the minimum guidelines for those loans, meaning that lenders cannot lend under those thresholds. But every lender can stack restrictions or requirements on top of those guidelines at their own accord. Typically, what you may hear when you talk about VA loan limits are the conforming/conventional loan limits set by the FHFA, and that is $726,200. But there's no actual guideline set by the VA. So some lenders you may see can go up to $2 million, $3 million with no down payment and no mortgage insurance. Now, having said all that, here are when there is a limit to every veteran. If you've received a VA loan in the past and that VA loan is still active, you can go get another VA loan if you have the eligibility left. You have to see your certificate of eligibility to see if you have eligibility left on that VA loan. At that point, you're capped at that max conforming loan limit for your area. So the number I mentioned before, $726,200, it could be higher if you're in a high cost of living or a high balance area. But there's a formula lenders use to see, what you have to put down based on the eligibility that you have left. Now, seek a lender to figure that number out. You're not going to be able to figure it out yourself. But long story short, most likely you're going to have to put down some form of down payment. But remember, there's no mortgage insurance with a VA loan. So if you have to put down 5%, that's better than putting down 3.5% on a FHA loan or even 3% on a conventional loan because there's no mortgage insurance involved. Now, while we're on the note of FHA loans, let's talk about property type. So you can use the VA loan to house hack. You can buy a 1, 2, 3, or 4 unit property with a VA loan. There are reserve requirements depending on how many units are in that property. You can purchase single family homes too, obviously, but you can also purchase condos. But be very wary of condos because the condos have to be approved by the VA. So what typically happens is, I'll tell you my situation where I try to use my VA loan to purchase a condo here in Dallas. I was like, oh, let me use my VA loan for the condo. We found out the condo was not VA approved, meaning that you have to go through this process to get the condo approved by the VA. There's no guarantee that will happen, and it can take like 30, 60, 90 days. So I just ended up using an FHA loan because I didn't want to roll the dice and the condo not even be approved in the first place. So that's something you want to talk to your lender about and say, hey, are these condos VA approved? And they can look that up. And also, to be clear, because I've never expressly said it, the VA loan is for your primary residence only. Once again, you can move out of the property after 1 year and rent it out like you can with other loan types, but primary residence only, and it's 0% down. There are closing costs associated with the VA loan, such as the VA funding fee. If you put down less than 5%, so if you're putting down like 0% like most people, there is a VA funding fee of 2.3% if it's your first time using a VA loan. Translation, if you're buying a $100,000 home, the VA funding fee, 2.3% equals $2,300. And do your math based on the loan size. The funding fee goes down to 1.65% if you put down more than 5%, and it goes down to 1.4% if you put down 10% or more. If you're a disabled veteran, the VA funding fee is waived for you. And this funding fee can be financed into the loan. You can pay it at closing if you want, but most people actually just roll it into the loan amount. For instance, if you put down 0% down, they add the VA funding fee on top of your loan. You're actually underwater before the loan even starts, but that really shouldn't matter that much because your plan should not be to sell the home like the next week. So you should be holding that property for like 3 to 5 days, 3 to 5 years, just something to be aware of. Also, when it comes to VA loans, a lot of times mortgage lenders will waive like the processing fee, the underwriting fee, and basically kind of the administrative operational fee for the loans. So your closing costs may be a little bit less than other loans like conventional and FHA. One more thing. The VA loan is 0% down. However, if you apply for a VA loan with somebody you're not married to, like a fiance or just a friend for some reason, right? You actually have to put down 25%. I'm not sure why, but just FYI, there's really no purpose of applying for a VA loan with somebody you're not married with because you're going to get hit over the head with that 25% down payment, which I found out when I tried to purchase this very home with my fiance. So we ended up going FHA in that situation. There's no minimum credit requirement per the VA. But once again, lender overlays, right? So typically lenders are going to see like a 620 plus credit score in order for you to qualify. Now, debt to income ratio, the VA recommends that you have at least a 41% debt to income ratio. However, lenders can go above that because it's a recommendation. I've seen scenarios where folks have gone all the way up to like 60% as far as their debt to income ratio. But honestly, don't bank on that being you, but it has happened. Now, residual income actually trumps your DTI on a VA loan. What the VA does is they take your gross income, subtract like your revolving debts, loans, and etc. from your gross monthly income. But also they subtract childcare expenses and utilities. So you can qualify for maybe a 41% debt to income ratio, but if you don't meet the residual income requirements, you don't qualify for the VA. Here's a quick overview of what those residual income requirements are for a single person applying for a VA loan. It's between $441 and $491, depending on what region of the country you're in. If you're in like a 4-person family, it goes from $1,003 all the way up to $1,170, depending on what portion of the country you're in. I'll have a chart in the description to the episode. Now, similar to with the FHA loan, realtors get scared of VA appraisals, because there's certain things that once again have to be fixed, but honestly there's stuff that should be fixed anyways. So the property needs to be in at least an average or better condition, meaning that the property needs to be in decent shape, right? The VA doesn't want to be insuring a crappy property. For instance, it could be an old house that's in great shape, thumbs up, but if it's a new house that's in bad shape, it won't work for the VA. So stuff like continuous supply of running water, free of lead-based paint, like access to the street, proper ventilation, no wood destroying insects or fungus. So you do have to get a termite inspection on the VA property as well. Especially if you're a first-time home buyer, those should apply to you no matter what type of loan you're using. But whatever, do your own thing, right? That's all I got. If you're a veteran, let me know where you served. I was in Norfolk, Virginia for 6 years. I went on 2 deployments across the Gulf. So I've been to about 21 countries during my time in the Navy. So I'd love to know where you're from, where you're at in your journey. And if I can help you, let me know. I'm in the Dallas area, but I can connect you with folks in all 50 states. If you're a civilian, big shout out to you for watching as well. So let me know where you're from as well. So let me know what job you're doing or something. So comment. And that's it. Buy land. Rumor has it they're not making any more of it.